Manfradytrade analysts believe that the US economy will gradually slow down without entering a recession, despite the fact that recent economic indicators have been weaker than expected. Recent data on price growth and labor market indicators were lower than expected. This has led analysts to revise their forecasts for interest rate cuts by the Federal Reserve. Experts are basing their new forecasts on the US labor market data for July, and they turned out to be worse than expected. Only 114,000 new jobs were created in non-agricultural sectors. This is significantly less than the projected 175,000. Therefore, analysts expect the Federal Reserve to cut interest rates at a faster pace. The percentage of people without jobs has risen to 4 3/10%, and the broader unemployment rate, which includes those who are underemployed, has increased to 7 8/10%. In addition, experts note that job openings and labor turnover data showed a decrease in both the number of people being hired and the number of employees voluntarily leaving their jobs. In addition, wage growth measured by the Employment Cost Index slowed in the second quarter. The last time such a slow pace was recorded was in the second quarter of 2021. The number of people filing for unemployment benefits for the first time increased by 249,000. This was the highest figure in the past 12 months. According to Manfradytrade forecasts, the US Federal Reserve will cut interest rates by a total of 1 basis point by the end of the year. In September, there will be a decrease of 0.5 of a point, and in November and December by 0.25 of a point. This is a more significant reduction than the previous forecast of a 0.50 basis point cut. Analysts remain positive about the economy's ability to slow down without a significant downturn, pointing to the strong financial position of households and businesses. However, the following factor should be taken into account. If price growth figures turn out to be higher than expected, this could lead to a slowdown in the pace of interest rate cuts. In this case, the economic forecast may be revised. However, not by much. Therefore, we should expect further growth in stocks, market indices, and cryptocurrency.